Gold versus silver. Which is the better investment? Imagine this. You have some extra money to invest. You want something safe, valuable, and trusted for thousands of years. Two options immediately come to mind: gold and silver. Both are precious metals. Both have been used as money for centuries. And both are popular investments today. But here's the big question. Which one is actually better for investing, gold or silver? Today, we're going to break it all down. History, price differences, advantages and disadvantages, and which metal might be better for your investment strategy. By the end of this video, you'll clearly understand gold versus silver and which one might deserve a place in your portfolio. The history of gold and silver. Gold and silver are not new investments. Humans have been using them for over 5,000 years. Gold was often seen as the metal of kings, empires, and wealth. Ancient civilizations like the Egyptians, Romans, and Chinese valued gold for its rarity and beauty. Silver, on the other hand, was often used for everyday trade and currency. In fact, many old coins were made mostly of silver. For centuries, the global economy used something called the gold and silver standard, where currencies were backed by these metals. Even today, governments and central banks still hold huge reserves of gold. So when people invest in gold or silver, they are investing in something that has held value for thousands of years. Why people invest in precious metals? Before comparing gold and silver, let's understand why investors buy precious metals in the first place. There are several reasons. First is inflation protection. When inflation rises and money loses value, precious metals often hold their purchasing power. Second is economic uncertainty. During financial crises or market crashes, investors often move their money into safer assets like gold and silver. Third is diversification. Many investors add metals to their portfolios to balance stocks, real estate, and other investments. And finally, there is physical ownership. Unlike stocks or digital assets, gold and silver are real, tangible assets you can hold in your hand. Gold, the king of precious metals. Gold is usually considered the ultimate safe haven investment. It has several major advantages. Stability. Gold prices tend to be more stable than silver. While the price does move up and down, it usually doesn't experience the same extreme volatility as silver. This makes gold attractive for investors who want lower risk. Global trust. Gold is trusted everywhere in the world. Central banks hold thousands of tons of gold as part of their reserves. This global trust gives gold a strong reputation as a store of value. Higher value per ounce. Gold is much more expensive than silver. Because of this, it's easier to store large amounts of wealth in a small space. For example, a small bar of gold could be worth thousands of pounds. Safe haven asset. Whenever the economy becomes uncertain, gold prices often rise. That's why many investors call gold financial insurance. The downsides of gold. However, gold is not perfect. There are a few disadvantages. First, gold can grow more slowly than other investments like stocks. Second, it doesn't produce income. Unlike dividend stocks or rental properties, gold doesn't pay you anything while you hold it. And finally, gold can be expensive for new investors, since even small amounts cost a lot. Silver, the underrated metal. Now let's talk about silver. Silver is sometimes called poor man's gold, but that doesn't mean it's a bad investment. In fact, silver has some unique advantages. Much more affordable. Silver is far cheaper than gold. This makes it easier for beginner investors to start buying precious metals without spending thousands of pounds. Higher growth potential. Silver prices tend to move more dramatically than gold. When precious metal markets rise, silver often increases faster than gold. This gives silver higher potential returns. Industrial demand. This is one of silver's biggest strengths. Silver isn't just used for jewelry or coins. It's also used in many industries, including electronics, solar panels, medical equipment, batteries, electric vehicles. Because of this, silver has real industrial demand. As technology grows, the demand for silver may increase. The downsides of silver. But silver also has disadvantages. First, it is much more volatile. Prices can rise quickly, but they can also fall quickly. Second, silver requires more storage space. Because silver is cheaper per ounce, you need a lot more physical metal to store the same value as gold. And third, silver markets can sometimes be influenced by industrial demand cycles, which can affect price stability. The gold to silver ratio. Investors often compare gold and silver using something called the gold to silver ratio. This ratio shows how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has changed a lot. Sometimes gold becomes very expensive compared to silver, and sometimes silver becomes stronger. Some investors use this ratio to decide which metal might be undervalued. For example, if silver becomes very cheap compared to gold, investors may buy silver expecting it to catch up. Which one is better for investment? So now the big question. Gold or silver, which is better? The answer depends on your goals. Gold may be better if you want stability, long-term wealth protection, a trusted safe haven asset. Silver may be better if you want higher growth potential, a lower starting investment, exposure to industrial demand. Many experienced investors actually buy both. They use gold for stability and silver for growth. Final thoughts. Gold and silver have both stood the test of time. For thousands of years, they have represented wealth, power, and security. Gold offers stability and global trust. Silver offers affordability and growth potential. Neither metal is perfect, but both can play an important role in a balanced investment strategy. So the real question isn't always gold versus silver. Sometimes the best answer is simply gold and silver together. Because when it comes to protecting wealth and preparing for the future, diversification is one of the smartest moves an investor can make.